You're starting to get more commentary from analysts about AMC's earnings. Now, this article, I think, breaks it down pretty easily for you guys to see. There's some bottom lines here, like AMC's earnings was a quote, overall great report. Not the same language you've heard in the past for AMC stock. Now, AMC does typically rally after earnings. Where are we at in that cycle? I want to give you guys at least my breakdown and my opinion on this and what could potentially be coming for AMC, because there's a lot happening in the markets right now. This is not clean cut. This is not cut and dry. You got debt ceiling fears. You got recession fears. You got one of the worst banking collapses in history just happened. I mean, the most bank failures just happened. So I think there's a lot of things going on, and take all of that into consideration into what we're going to talk about here in this video as well. Nonetheless, let's dive straight into it. Hit the like button and subscribe to the channel if you have not done so already. It is free 99, and consider sticking around a while. So this article says just that. AMC stock, overall a great Q1 earnings report. AMC Entertainment reported first quarter earnings that beat expectations. Here's what you need to know. Now, if we go ahead, I want to skip through some of this stuff. As you guys know, AMC did beat earnings by a pretty decent margin. It was like 35% or $35 million top line beat from the analyst expectation. So that was pretty good. Analysts had estimated, and it was 21% better. So year over year. So you've seen some positive things come out just on the overall headline numbers. Now, a big highlight of AMC's earnings that a lot of people are pretty excited about is the food and beverage revenue actually increased 30% year over year. That is a huge increase. Now, in addition to that, AMC posted earnings before interest, taxes, depreciation, and amortization that rose for the second consecutive quarter. In the first quarter, EBITDA increased $69 million to $7 million. In the year-ago quarter, AMC saw an EBITDA loss of $62 million. After the release of results on May 5th, AMC shares surged by about 4% in pre-market trading. And then you guys obviously do know AMC stock was down for that day, and that is what typically does happen after AMC reports earnings. It's not uncommon to see the stock fall following earnings. Now, this says the best Q1 box office since March of 2020. AMC's Q1 revenue can be explained by the number of movies released in the past few months. In Q1 2023, Hollywood released 35 films that grossed over $5 million domestically. I believe 5 million? That doesn't sound right. 5 billion? Sounds a little better. That's a 34% year-over-year increase. That was the best first quarter box office performance since the beginning of the COVID pandemic in March of 2020. The 2023 first quarter box office receipts reached 72% of what they had been in the first quarter of 2019. That's a marked improvement from last year's first quarter, when the box office reached only 50% of pre-pandemic levels. And I think this is pretty good as well. Now, it says slight improvement to AMC's balance sheet and cash burn, because we've talked about this a couple times, but with this arbitrage trade currently in AMC stock, hedge funds are looking at it like this, right? Best case, base case, worst case scenario. Well, best case scenario obviously would be for them, for this squeeze to not happen, right? For this reverse split to happen, for AMC stock price to fall, and for APE to rise. That's their best case scenario. Now, their base case scenario probably somewhat in between what I just said, and the worst case scenario, which would be AMC rising, right? And APE falling, their short positions going against them. Now, when they're doing this calculation, one of the things that I think has held a lot of shorts in this short position, even recently, as you've kind of seen this arbitrage trade fall apart, is the fact that if this trade does fall apart, this arbitrage trade, well, AMC's still in a bad fundamental spot, maybe in a worse fundamental spot if this does not go through. So it's like one of those things, right? If you had Redbox, right? If you were short on Redbox, do we remember that stock? Well, that stock, the whole time it was going higher, was bought out for 40 cents. So really, if you shorted at like $5 and it ran to 20 or whatever it ran to, as long as you could just stay in your position, you knew that stock was going back to 40 cents because it was going to happen, literally. So same thing with the fundamental valuation, same thing with, AMC's business prospects as a whole. If there's no business in a particular name, then what does a short squeeze even matter? You might as well just ride it out until that company does go bankrupt or something bad happens, right? So that's kind of what I believe is happening right now. After earnings, they've gotten a lot more jumpy. They've really wanted to suppress this stock a lot more after earnings because of these improvements that we're seeing. AMC is not, in fact, a dying business, and that has made them get a little bit more aggressive actually shorting the stock. So it says right here, slight improvements to AMC's balance sheet and cash burn. Even though box office returns are growing, AMC is not out of the woods yet. After all, it still hasn't reached pre-pandemic levels. However, AMC poses little bankruptcy risk due to its quarter-end liquidity of $704 million, comprised of $496 million in cash and cash equivalents and $208 million in undrawn credit facilities. Cash burn also improved last quarter. AMC spent about $190 million on operating activities compared to $224 million in the same period last year. In addition, AMC managed to reduce its interest-bearing debt load by $208.5 million during Q1 2023. The company was able to do this thanks to its AMC Preferred Equity APE issuances of $155.4 million this quarter, and AMC also did give promising guidance. Now, according to AMC's management, the company is expected to see a substantial increase in revenue due to exciting theatrical releases this year. AMC expects domestic box office revenue to hit $9 billion or higher in 2023. Now, they also did talk about making their own brand of candy, and I think that is interesting because they're talking about having much better margins, and especially when people are spending more and splurging more to do activities, right? To go to the movies. People are spending more money on food and beverage. That could be interesting. Now, long story short, I don't want to read this whole article or really get into the other ones that I had planned. The analysts are getting pretty bullish on AMC. They're saying this quarter is optimistic. They're saying this quarter is another step in the right direction. We're not taking, a step back here. This is a step forward. And I think that will be reflected in AMC once shorts do start to get a little bit more squeezed in their short positions. And that's crazy to think that after AMC had good earnings the way that they did, people just came out and shorted the stock to oblivion again. You're actually seeing a lot of artificial shorting of AMC stock as well. If we take a look at the option activity for the day today, you have seen 3 orders totaling $21.59 million with a positive order value of 1%. Now, let's look at these 3 orders because they're huge. They're massive. You got a May 19th $13 put for $11.8 million. And then you have a July 21st $10 call for almost $300,000. And then you have a July 21st $10 put for $9.5 million. So, essentially here, this would be a 30x difference, meaning their put position is 30 times as large as their call position. And it's close to the money, right? Or it's in the money, but it's close to being positive, right? Factoring in the $613 they paid, or $6.13 a contract. Long story short, if that don't make sense to you guys what I just said, well, come join us in the trading community. Link down below in the description of this video. You will learn all of this stuff. But what this is telling me right here, by them buying these out the money calls, the $10 calls for July 21st, $10 calls, AMC is $5.51 right now. That means AMC stock would have to double from here for these to go in the money. If you factor in the money, and let's say AMC went to $13 per share, this $300,000 position would essentially equal the value that they paid for the put position, right? So they think there's a potential here. If worse comes to worse for them by July 21st, the AMC stock could go up 30x. That is what this is telling me. And that's just one trade to point it out. A lot of them are similar. Some of them are 5, 10, 20, 25 times the ratio, right? 25 times larger put position. In this case, 30 times. Some are 10 times larger than the call position, right? It does vary, but a lot of these hedge funds, that's how they're playing with the options here. Find it kind of fascinating. So there you have that. Now let's talk about this cycle, right? That usually takes place with AMC stock. We've talked about it many times in the past, but the earnings cycle with AMC is pretty defined. You tend to rally after earnings. Now, there's only been 2 times where you really have not, and the one time you actually rallied before earnings, and that was the last earnings. You've seen a pretty good size rally right before earnings, and then you sold off after earnings, largely due to this whole arbitrage trade and reverse split proposal. Right, that's what caused this rally, and then we got more or less confirmation of that yes vote on March 14th, and now we've been on this really roller coaster ride. If you guys ever went to like the county fair or anything like that, that dragon ride that's just like a little kid ride that's just up, down, little slopes. You know, it really doesn't go too high or have a big drop or anything. That's what this chart looks like. Up and down, but trending to the upside. Now, this earnings season is a little bit different than others because you have debt ceiling fears. You have obviously a slowdown in the economy, right? Earnings really are not looking that good as a whole. This earnings season was pretty pitiful on a year-over-year basis. So you have a lot of external things, the Fed, right? Multiple different things happening in the background that does play a role to AMC every single day. We're not quite getting the collateral crisis yet, and that's because AMC stock is not broke out above $6 per share. That is the key level. That is the squeeze level. If you break out above $6 per share, AMC stock is going exponentially higher from here. And that is what some of those option trades that I just went over are highlighting. These hedge funds think AMC could go to $10 per share if you get a rally from here, right? Just based off the strike that they bought. That was a $10 call that they had purchased. Well, to break even on that whole trade, they would need AMC stock to go to, exponentially higher, right? Way higher. So, when you factor in these things, it's going to look a little bit different this time around. But typically AMC does rally. Now, sometimes you rally weeks after earnings, which is kind of interesting. Let me take you guys back to March of 2022. You sold off following earnings for how many days was this? You sold off for like 10 days after earnings, and then you started to make that upside move. From the earnings day to the peak of the rally in this cycle was 19 trading days. It was 27 calendar days. So sometimes it can take a while or just more time than we would like, right? And this time's probably going to be like that. We're just, 1, 2, 3 days off of earnings now. I think the rally will likely start here very shortly, at least in my personal opinion. But you got debt ceiling fears, you got Fed Jerome Powell fears, you got inflation fears, you got economic recession fears, and a potential catastrophe if the government does not raise the debt ceiling. So there's a lot of factors here, like I said, but my personal opinion, AMC stock does continue on this upside trend. And I mean, if you literally were to draw this out, boom, you're up, you're down, you're up, you're down, you're up, now you're down, and then you come back up again. And once you break $6, that's where I think you get the bigger break. If we got rejected here and confirm that as resistance. If you come down for a couple of days and then go higher and break out above 6, I'm not going to complain with that whatsoever. And I don't think any of you guys would as well. But a lot of people just, you can't let emotions get into it. Statistically, what happens with AMC? It rallies after earnings about 80% of the time. Those are pretty good odds, and I like those odds for a rally coming this time. And I guess if you wanted to boil everything down, that's what I would say. Statistically, the most probable outcome over the next days and weeks is that AMC rallies from here, guys. So that is going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys also want to come trade with me live in real time, link down below in the description of this video as well. Thank you for watching, and I will see you in the next one.